guys. Here today with Sean McNemar from Bank of England. And I wanted to tackle a topic today that I've noticed that a lot of my clients, my buyers in particular, have had questions about. Everyone knows that 90% of people who buy a home have to secure a mortgage, financing of some kind. But they're not real sure on how to go about that or what the process looks like. Even when they're going through the process, it can be a little confusing. Yeah. So I'm here today with Sean.
And is that a real stat? 90%?
Well, it's not a real stat, but I mean, 90% of the homes that I've sold have required a mortgage.
Yeah. No, I mean, that makes a lot of sense. I mean, you know, the cash buyer, that's few and far between, I guess. A lot of the investment properties around Indy.
Right.
You know, we got the investors coming in doing that. So yeah, I bet that makes up about 10%.
Right. Yeah, I have sold some cash deals, but those are usually investors.
Yeah.
I had one that wasn't, but
cool.
90% of them needed a mortgage.
Cool.
And I want to try to get them to understand A, how the process works, and B, what kind of products are out there for prospective buyers.
Perfect.
Sean, thanks for being here today.
Yeah, man. Absolutely. Anytime.
All right. Well, let's start there. When should people contact me or you when they're thinking about buying a home?
Right. So I think some of these questions that we'll review, it's always well, it depends. Mm-hmm. But outside of that, I think contacting the lender and or the realtor immediately. Like when you think home ownership might be in my future, mm-hmm. right? I'm the client. I'm thinking about buying a house. I don't care if it's in 2 days or 2 years. We need to find out really what you qualify for, right? So and I think we'll dive into a lot more of it. Mm-hmm. So on the surface, it's immediately. As soon as you get to a point where you think, I may be buying a house, whether it's now or in 5 years or whatever, because I'm going to be able to figure out and help you figure out what that plan looks like. Whether you can buy now, which would be fantastic. Mm-hmm. If not, cool. Let me help you get to that point 2 years from now when you're actually ready. But now you have your credit scores the best they can possibly be. Now we have your savings because we put you on a savings plan. You've budgeted, you've done all those things to get to the point where, okay, now it's time to pull the trigger. I'm qualifying for the best of the best that's out there at that particular time.
Right. That's good. I usually say if you're thinking about buying a house, contact me 6 months to a year before you're actually going to do it.
Yeah.
You might have great credit and you may not have to contact me that soon, but you might need some work that you don't even know about. Right. So if you're thinking about doing it in the next year, call me or Sean and we can get you ready.
Yeah, for sure. Let's do that. And for everybody watching on YouTube, I actually have a Facebook Live going on. It looks like we have quite a bit of comments. I can't see these comments, so you guys keep doing it. I'll try to get back to it, maybe direct message me, whatever. Any questions that we don't hit on actually on this, shoot me a private message or hit me up however, and Mark and I will get those answered for you. So yeah. So yes, initially when you're ready to become a homeowner or you just have questions about it, always contact a realtor. Always contact me, the lender, and we'll get it set up.
Okay. Well, the next question is probably going to have a long answer. But once someone...
Longer than that one?
Longer than that one. Once somebody is in the process, what can they expect throughout the process from pre-approval to close? I mean, what does that look like? Because I get a lot of questions about what's going to happen to me.
Right. Well, first and foremost, we're going to have a hopes and dreams phone call.
Okay.
And what I mean by hopes and dreams, it's going to be you and myself on the phone call, because what I like to do is find out what's most important to Mark. If I know what gets you out of bed in the morning, or I understand like, hey, I need to have this payment and not exceed it, or I can't bring any more than this to closing, okay, cool. You can only bring this, or you want your payment to be this, you can't go and buy a $500,000 house.
Right.
So we need to marry those two up, right? The hopes and dreams. If the stars were to align, Sean, here's what we're looking to get accomplished. So cool. With that, what we'll do is have you complete the application. We have an app that you send to all your clients. It's a fast app, very easy. You can do it from your cell phone. If it takes you 10 minutes, you're overthinking it. With that being said, I'm going to get an email. I'll be able to run through everything that you put in there, give you a call back, fill in some of those blanks, and let you know what's next. Now, the next steps is the key. That's going to take us from a pre-qualification to a pre-approval. Now,
Can we hit on that for a minute?
Yes,
because
let's do it.
I get that question all the time. What's the difference between a pre-qualification and a pre-approval?
Yeah, so it's pretty simple. Pre-qualification is just verbal. This is me and you talking. Hey, I make XYZ every month. I want to buy this much house. Here, my credit scores should be X. What do you think? Okay, well, here, you can buy a $250,000 house with 5% down. Here's what your payment should be. Go out there and make an offer. Now, BOE Mortgage Indy, we don't do that. I've never done that. I've been doing this almost 15 years. And the way that I feel is best, not only for the client, but mostly for the realtor, right? Because you're going to be the one out there driving. You're spending the money on the gas. That's all your time out in the community showing these homes. If you are showing the houses with a pre-qualification, you write the offer, it gets accepted, it comes back to the lender, we get it into underwriting, and now we find all the red flags and hurdles that we need to encounter, and we're 2 weeks from closing. Huge problem. That's a pre-qualification. Don't stop there is really my message. So rewind back to what I was saying. The next steps, after I have a phone call with you and kind of review everything, hey, everything's in line for this pre-qualification, let's get these income and these asset documents emailed, faxed. Don't send fax, actually. Do you send faxes? I haven't sent a fax since 2008.
Right. Yeah, I haven't. Yeah, it's been forever.
Email it. You can come meet me in person, whatever. But we're going to get those documents back. Pay stubs, W-2s, 1099s, tax returns. I'm coming up with anything and everything off the top of my head. Savings accounts. Where is your down payment going to come out of? Is it a 401k that you're going to liquidate? All these different items, right? We have that within the conversation, and I know. So my email, long story long, is going to have a list of all that. I'm also introducing you to my team, the client, to my team. They're going to be the ones doing all the heavy lifting, documentation collection, data entry within the systems, right? To help me help you, that type of thing. So once we get that in, about 48 hours at the most, once we have it in, I got the pre-approval ready. Now the pre-approval, the difference, we've already run that through the first stage of underwriting.
Right.
Huge situation for numerous reasons that I'll talk about.
Any red flags that should come up probably already have.
I know them already.
Right.
I know them already.
Very important.
And the client and myself and my team, we've had a conversation as to how to start working on correcting those if we need to on buying now. If we get to the point where it's like, oh, well, your credit scores are below the standard as to what we need to get qualified, here's how we can help you get those improved. And here's a rough estimation as to a timeline. Then I can alert you of it, so you're not out and about showing people houses that can't get a house yet, right? Yet, that's the whole thing. It's never a no and then, all right, see you later. It's always a yes if we do X, Y, and Z. Yes, but we got to correct X, Y, and Z.
Right.
So when we get to the pre-approval, it's a conditional underwriting approval. It's been through the first stage of underwriting. We have an automated underwriting system approval. It's approve eligible. We're ready to roll. I've had a conversation with the client, and then I'm following up with an email. You're attached, or whatever agent that I'm working with on that particular file is attached. Here we go. That allows the agent a few things. Mostly negotiating leverage. Because we've been through the first stage of underwriting, you can close inside of 30 days. I have everything. Right? The only thing that we need to update is if we get 60 days from whatever that date is, we need to update pay stubs and bank statements, right? Dated documents, and that's easy. Those are very simple items. We already have everything else. We get the purchase contract, we get those, and we're off and running. And we're closing ASAP. And you know this just as well as I do. Maybe you can elaborate. In today's market, at least in Indianapolis, if you are purchasing a house, $250,000 or less, which that's the most affordable home, they go like that. I mean, they go like that. So if I'm providing the realtor the negotiating leverage to win that offer battle, I don't even know what we'll call it, but that offer battle, man, that really makes you look good.
Right.
And whether the client knows that or not, that's not really...
Well, it makes the offer look good.
100%.
Yeah, not just me, but if you can come to the table with, and as a matter of fact, in 2019, on homes 250,000 or less, if you come to the table with an offer that doesn't have a pre-approval, you run about a 75% chance of just being rejected. because they're going to get plenty of offers on those
Yeah.
houses with pre-approvals.
Yeah.
So it's almost required right now in 2019
Oh, for sure.
to come with a pre-approval.
For sure, and you shouldn't. Like, there's something that that comes to mind. It's like, why would you be okay? And I'll go from two sides. Why would you be okay as the client, as the buyer, going to submit an offer on a house that you haven't gone through all the steps to figure out if you're really pre-approved or not?
Right.
Right? So look at it from this side, the bank. Like, I'm the bank, right? Not technically, but I work for the bank. The bank is not going to lend hundreds of thousands of dollars to a buyer without collecting all of these documents and taking all of these different steps. There's a lot of risk.
Right.
Like, people at home, would you all lend hundreds of thousands of dollars to somebody that you don't even know if they can repay you? Probably not. So the key, and it's very difficult, is for everybody involved, me, you, the client, to be thinking of it from both sides. Because we get the question all the time, and I think we'll touch on this, is, well, man, why do we need all this documentation? Really?
Right.
Like, this is tough. Like, can't you just tell me? Like, this is really easy, right? Yeah, I could tell you. I've been doing this long enough. On the surface, I can take a peek. That's not how I operate. You know, if you want to work with a lender, with a bank that is just going to let you fly by the seat of your pants and not be the professional and do right by you, even though you don't like it, right? It's almost, this is going to sound bad, but it's almost like kids, right? We want to make sure, like we want the best for our children. They don't really understand why we're telling them to do what they need to do. Well, because I said so, that type of thing. We're giving them that answer. We can't do that in our profession. But it truly is very similar because what we do is not rocket science. But at the same time, someone buying a house, especially a first-time home buyer, has no idea everything that goes into it.
Right. Right, and it's important to know that someone like Sean and some of the other lenders I work with, the reason they're asking you for all these documents and putting you through all these paces is not just for them, but to make sure that you're not put in a compromising financial situation as well.
Oh yeah, I don't want to look through all that.
Right.
I have to.
Right,
I have to.
right.
It is 100% for the client.
Right, and if you know that you're not in a position right now where you can buy right now, but you want to, I work with several clients right now who I've been working with for months to go through that process and get them ready to buy. So if you want, give me a call and we'll hook you up with Sean and we'll see what we have to do to get you ready to go. And you did hit on something about the paperwork.
Yeah.
And you already said why all the paperwork. So I can go ahead and skip that because you already answered that
No, I
question.
mean, there's really not much else to it, and maybe we can touch on, like, okay, they're saying paperwork. What do they mean paperwork? The income and asset stuff that I was touching on earlier, right? And there could be situations like if you've gone through a divorce or if you've had a foreclosure or bankruptcies, there's additional items that we want to collect because the way everything is written, that could create another condition that down the road, that's a red flag or hurdle that we're going to have to, down the road, ask you for 17 more different items that I already knew about up front.
Right.
And if I know about it up front, I'm not doing everyone justice by just avoiding the fact that I have to ask you for it. No, I'm just going to ask you for it now. So let's bite the bullet. Let's take the extra 24 hours it's going to take now, so that it could put you into a situation where you can't close.
Right.
Right. It could be
Been there.
the difference between approved and not approved. Very simple, right? So that's why we want to go the extra couple steps outside of that pre-qualification. The pre-approval is huge. It's huge for the client. For me, it's huge for you guys because you're the star of the show. You're the ones that have the ability to negotiate, and you're the ones that actually make it all happen. You know, I'm over here pushing papers. That's the truth. And if it wasn't for you, I'm not working with that buyer.
Right.
You're bringing it to me. So, I mean, that's truly how it is. So if I'm not giving the agent the most leverage within your position as humanly possible, I'm doing it wrong. I'm doing it wrong. So I guess it's a two-pronged approach where I got to make you look like the superstar, but I also got to take care of the client so that you're not wasting your time with someone that needs to buy 6 months from now and not right now.
Right. Okay, so we've gone through the pre-approval. We understand why that's important. So I have the pre-approval. I'm working with the buyer, and we actually find a house. We make an offer. We get accepted. What happens now?
Once it gets accepted, we're already ready to roll. I need to get the purchase contract. It's got to be signed by everybody, right? And you'll likely send that to me. The client, you're going to get a copy of it, but you probably don't need to do that. My team is going to go through, double check to see if there are any dated documents, pay stubs, assets like bank statements that are not within 30 days of closing, and we'll need to get those updated months, right? That type of thing. But once we have that, and that's either sent to us, not by fax, remember?
Right.
Emailed or brought in, once we have that, we're ready to roll. We put it in, and that's when you can lock your rate. I don't even think we spoke about this prior to setting it up, but that's when you want to lock your rate, because if you're looking at locking an interest rate, this is going to get maybe a little nerdy. The longer you lock it in, the worse the pricing is going to be, the worse the interest rate might be, right? So as everything is fluctuating, we want to kind of get the best of both worlds. That's why doing all the work up front makes all the sense in the world, because we could get you to the point where you can lock because you think rates are going to go through the roof, but it doesn't matter because you're not even approved. So we just did all that work for nothing. So let's do the work now, and let's get you to the point where you have the purchase contract come in, we update the dated documents, and now we lock you in, we're ready to roll, and we're good to go.
Okay. Now, one piece of documentation that a lot of my clients have had, it's caused a lot of stress, let's put it this way, is that the loan estimate, like 3 days before closing, it always seems to be inflated, and the cash that they have to bring to close seems to always be exorbitantly more than they do. Okay. So why is that? Why does that document have to be delivered?
You know, that's something when TRID came out, and this is, I think TRID was end of 14 when that happened, and that was really kind of a double down on the Dodd-Frank, when all these different consumer and client...
Explain that piece of legislation. What was it designed to do? Well, other than when the government gets involved, it always screws things up. But, you know.
Okay, so, well, 15-second version, the bubble burst, 07, 08, 09.
Right.
In 2010, Dodd-Frank came out during the Obama administration. What you want to think of Obama, who cares? This is actually a really good situation for the consumer. Right? It requires the consumer to now be way more informed. You're required to look at every single document prior to the closing disclosure. You actually have to view it, and you have to sign it, that type of thing. Whether you read it or not, that's up to you. At home, but
highly encourage it.
Well, yeah, of course, and ask about it. Like, we know about it. Here's what it is. We're not trying to hide anything. Way back when, and the reason why the country got to that point is there were some predatory lending options, practices where the clients at home, first off, were not being disclosed. That was the problem, and that's what Dodd-Frank counteracted. And then, when you got to the point, you were kind of being strong-armed at the closing, hey, just close, sign here. Or you didn't know like what the payments were on like the payment option arms where people start getting into negative equity. That type of thing, right? Foreclosures happen. Half of your community is a foreclosure, and now because I'm making my mortgage payments, my house goes from worth $400,000 down to $300,000 just because no one else can afford it because they didn't know what their payments actually were supposed to be anyway.
Right.
So the whole double down part of TRID is, as the lender, we are required to provide all these documents in like a very timely manner, right? Where after the closing you have that 3-day rescission period where you can say, I just don't feel like doing it. Well, now we have a 3-day rescission period before closing that you're talking about.
That's right.
Now, what happens within this process, and this is a long way of getting to that, and this is a great question, the lender, we get fees from the title company and the appraiser, blah, blah. We get all this stuff, right? So when that initial closing disclosure goes out, it is 100% accurate other than title fees. So what happens is we have to send an initial closing disclosure to be viewed and signed by the buyer, by the client, 3 days prior to that closing. During that 3 days, that happens, the clock starts, and you can't close until that 3-day clock expires.
Right.
But within that period, we send it as the lender to the title company so that they can balance all their fees, all their charges. There is a certain variance, and that variance fluctuates a little bit, so I'm not going to say it kind of on TV here. But if those fees change by a certain-ish 10% variance, then the title company and or the lender has to eat that.
Oh, okay.
So to kind of go back to your question, like, hey, it's like an exorbitantly more amount of dollars due at closing on the initial to the final. Well, there's TRID, the double down, is that actually doesn't happen anymore. It happens to a point where it may not be perfect, but the only thing that would change from the initial closing disclosure to the final closing disclosure are the tweaking of the title charges. Now, luckily, we're in Indiana. In Indiana, through my experience, I've been doing national lending for almost 15 years now. One of the top 5 cheapest title costs in the country. So that's fantastic. Mm-hmm. So even if there's a 10% variance, and it fluctuates, it's very small when we're talking about $800 here or $1,200 there, depending upon the purchase price.
Okay.
So I'm not saying that you're wrong, because you aren't, right? Like, your experiences are what your experiences are, but there are steps in place to where it can't happen too much.
Yeah, you try to limit it.
Yeah.
Okay.
Yeah.
Okay, so
Great question. I mean, that's a scenario, and it might even be just kind of like a not misinterpretation, but just like a wrong perception of, well, damn, I thought I was bringing $4,000, but it shows $8,000. Well, something is different, and there were conversations in there, or something happened.
It's never that much.
It's never that much. So, but if it is, like, there is a legitimate reason for it, and me, the client, you, the title company, 2 or 3 of the 4 know exactly what's been going on. It's just we need to communicate a little better is really all that would be. Yeah.
All right, so now we're at the closing table. Is there anything you want to talk about? The funding, anything like that you want to touch on before we wrap it up here?
Well, the beautiful thing about the closing disclosures are closings are so easy now, right? There's really rarely any questions. We just had one the other day. There's no questions. People are smiling, they're excited to get their key, and that's the fun part of the job, right? That's
absolutely
one of the
being
fun
in the
parts.
closing room.
Of course, yeah. And that's just like, hey, I'm going to go to this closing, but we're just hanging out and we're getting to know them more as people outside of like the transaction. Mm-hmm. So at closing, you already know you're required to view and sign 5, 6, 10 different things throughout the process. So once you're reviewing the documents as a client, as a customer, as a buyer, you already know what's going on.
Yeah, it's very rare that there's a surprise at closing anymore.
Yeah, well, if it's a surprise, it's on the initial disclosure.
Sure, yeah,
and,
you already knew about
and we have
3 days.
3 days,
Yeah,
and we
right.
can't close until 3 days later anyway. So
Right.
we got all this time to figure this out, but it's never something really to figure out. There was, I don't know, somebody fat-fingered a 7 instead of a 5, or something simple where it can get changed very quickly.
No, I do want to go back a little bit. Do you mind?
No, not at all. And also, but sorry for the YouTube, but the people at home, we have quite a few comments. Just as a reminder, I said it at the beginning, we can't read it. It's a little too far away. So just hit me up on social media or text me if you have my number, and I can answer any additional questions you guys might have.
I want to do, between the time of pre-approval and closing, I say this to all of my buyers when we first meet, and I want to say it here on this video. Once you get that pre-approval, don't do anything to change the dynamics of your credit.
Yes.
Don't go buy a new car.
That's right.
Don't open a new credit card.
That's right.
Yeah, because that can prevent you from closing once we do find the house.
100%. 100%. It's one of those things that nothing is worse than, it's good and it's bad, right? It's almost bittersweet where, hey, I'm a first-time home buyer, and we alert you as the buyer, like, make sure you don't open any new credit cards. I know it sounds counterproductive. Don't go buy the furniture for your new house, even though you need to. Don't go do that, or at least don't go finance it, because what can happen is it can take, from a monthly outgoing perspective, it can take you from being approved to not being approved.
Absolutely.
And people are pulling your credit.
Be very careful with that.
Yeah, if you have to finance it, I've had situations where somebody's buying a house, and then we check to make sure that there's no new debt taken out between the time that we pulled the credit report, and someone purchased a BMW, and now they got an $800 car payment.
Right. Changes their debt to income.
Yeah, and I'm significantly.
Right.
And luckily on that particular one, they were approved with flying colors, and they could actually afford it, so it did not cost them the house. But could you imagine?
I've heard stories where it has, though. I've heard stories where people show up to closing with a new car, and that, we bought it yesterday, and then
It's unbelievable.
they
Take
can't
it
get
back.
the house now.
Take it back.
Right.
Because you're gonna have to live in it.
Right.
Yeah.
All
Take it
right.
back.
Cool. All right, well, to wrap it up, I want to focus on you a little bit, Sean. Can you tell us why you love to do what you do?
Yeah, so the education side of it is huge, and I thought about this, and I've been thinking about this a lot, because if you have a job that you love, they say it's never work, right?
Right.
Well, let's be honest.
There's work. There's always work.
This is a job, bro. You know, so I don't love this like I love golf. I don't love this like I love coaching my kids in sports, that type of thing. If I got paid to do that, that'd be fantastic, and we could talk about that all day long.
Well, honestly, if you got paid to play golf, there are things outside of the golf course that professional golfers have to deal with at work. So.
That's true. That's true. You wouldn't know me if that was the case. But either way, it's the education piece. So mortgages made easy is my thing, and like we said earlier, it's not rocket science. But if you don't do this for a living, it can be so overwhelming. And it seemed like such a tall task. Okay, we got some furniture from IKEA the other day. IKEA, right? No big deal, just for the playroom for the kids, little easy table. That thing took me 3 hours to put together. And I was cussing and I was throwing stuff. I don't have the patience for it. But it was because I didn't understand, even though I'm trying to follow these directions, why is this so hard? Well, it isn't hard. It's IKEA furniture, right? Like this isn't brain surgery. That type of thing, and you're not going to kill somebody by not putting, by only putting 3 legs on instead of 4. Like somebody might fall over and get. So, what I try to do is through each step, I go about it the exact same way to instruct whether it's your first time or your 12th time. This is the right way to go. Let's not put the cart before the horse. That's what I enjoy. It really is, and making people, giving them that. Oh wow, that was easy. When I hear that, I'm like, yes, exactly, because it is. It is. Well, it is for me because I'm putting furniture together every single day.
Right.
But yeah, that's what I love about it. Outside of that, I mean, nobody wants to go and make 100 phone calls a day. Nobody wants to do this and that and the other, or even put a collared shirt on. It's a job. That's what I love about what we do.
Awesome.
Yeah, just making it easy on somebody to get what they want, being that that medium that they use, and then they tell all their friends. That's probably the best part. When we get referrals, right? When we get referrals, because we made the process so easy, because we got the best price on the house, or because when you sold their listing, you got them more than what they anticipated, or we taught them something that they had no idea even existed, and now that we taught them that, it changed their perspective, and then they went with that particular option because, oh wow, Sean or Mark, that's right, I should do that. If I didn't speak to them, I would have gone this direction because my family member or whoever told me to go this way, which was cool for them, but it wasn't good for me.
Right.
That's the fun part, opening people's eyes from an educational angle, not like a sales thing, but like that educational piece over time it's fun.
Awesome.
Yeah.
All right, guys. Well, thanks for tuning in. I hope you found this edition of Real Estate 101 informative and know a little bit more now about the mortgage process, and can be a little bit more comfortable when you're working with me. If you are looking to buy a house or sell a house, give me a call. All of my information will be at the end of the video. And I'd like to thank Sean for taking the time today, man.
Absolutely.
Thanks for sitting down.
Next time we should do another one. Maybe we can go through in depth on some different programs, products and programs.
Yeah, this one ran a little long, but I would like to cover that in the future.
Maybe what we can do is kind of bring some different scenarios to fit some of the folks at home with, just to relate, like, oh, well, yep, that's me, or no, that one doesn't really apply to me. Because there's so many different scenarios, and that's why on that hopes and dreams call up front that we discussed about, I'm uncovering all of that. I'm trying to find out so I can put myself in their shoes. All right, where would I take this? And then I can bring that to the table of, based on everything that you just told me of what's important to you, here's how I would structure it if I'm you. So, having a professional, having 2 professionals that you can work with that does it from that angle is priceless. It really is. It really is. So if we're able to give, I think that's when the referrals certainly come back.
Sure. So stay tuned in the future. We'll probably do, we'll most likely do another one
Yeah,
on
for
the,
sure.
the types of mortgages that are available and the products that are out there. So stay tuned, come back, and you'll see that one. But thanks for watching, and have a great day, everybody. See ya.